Hopefully everyone gains much knowledge from this, and I'll be able to share my educational piece that I've possibly taking my last trade of the year, and I'm excited. I've had tremendous amount of learning curve from my losses and great liquidity increase from all of my wins, and I'll be going over three of my most frequent things that how would you say, I deal with or I'm learning to go through, right? I have this screenshot here on the screen to show transparency that these are actual trades from MT5. It's just a lot easier for me to show you the transaction or how would you say the science on my what's and whys and if thens and that's on TradingView. So I'm going to get rid of this screenshot and we're going to hop straight into the charts. Obviously, these are buys: exit 1, exit 2, exit 3, exit 4. There. First things first, what are my targets? I have monthly targets here. I can actually probably get rid of all these lines, extra lines here. My monthly targets are here. Relatively equal highs. We've already taken 1, 2. The last one is here. And this is a standard deviation price area. Let's go to the 15. Let me also fix this. Now, I only have two ways of trying to buy into price. Is either we purge London sell side or London purges Asia's sell side, and I need to see displacement higher. That is all. I am an intraday trader. I'm not looking at the news. I'm not looking at articles. I'm looking for price action to disrespect the highs and lows at specific times of the days or disrespect sessions highs or session lows that was previous. Now, I'm going to go over my what's and why's. If this, then that. Keep it super simplistic. That was the displacement here on price. Beginning of London displaced through the open of the day, disrespected the highs of London, these relatively equal highs here. Displaced through that, fair value gap is here. Perfect. But thing is, London started to consolidate at its high. What does that tell me? That tells me when 830 hits, price needs to what? If you think about the four letters that only take place in price ever since the day it started, that every candle, every session has the open, perfect. Every session has a low, perfect. Now I'm waiting for a displacement higher above intraday's, not intraday, my apologies. I'm waiting for a displacement above internal liquidity. What internal liquidity? Well, the high that was placed here, let me also highlight that. A high that is disrespected, a high that created a low, a purge on sell side. These relatively equal lows underneath London's open. It's also perfect that is also underneath the open of the day. I need to see this high here be disrespected. I'm going to go down to a 5. Now we have that fair value gap. Bring that over. See if New York can engage with it. Also, how I shared a little bit of transparency with MT5, how I screenshotted that and brought it over. I also want to be a little bit more transparent and tell you I was honestly thinking that I was on the wrong side of the market. But I took that trade accepting the loss that can come from it. Now, why did I get emotional distraught? Well, simply based off how price decided to swing and purge sell side of London. That's exactly what I wanted, but I still got emotional. I still second guessed. It's not that I didn't want price to go down there. It's how price went down there. But I can't control how price does something. I just should be highlighting the key areas of where I want price to go. It's like someone talking, you wasn't expecting them to use a certain tonality, but they still said what you wanted to say and what you believe. Now, price communicated incorrectly to me in this run up. I was expecting a displacement on this high. Price took this high, yes, but look at how it took that high. It's not ready for a bullish run or a new bullish dealing range to be placed. It took this high with lack of displacement. Okay. It's not time yet. It's not time at all. Price swings back down. Now everyone who bought down here or here are now out of the market. Look at this swing back. I'm glad I didn't get in. Maybe I'm reading price correctly. Maybe I'm being a little too over emotional. Maybe I'm still a beginner. Maybe there's a lot of learning curve that still need to take place. So for me, I always take from the high to the second candle's high or mean threshold. That is where I would like to enter. And that is where I did enter off on. And I entered off the first engagement. Now, one of my first learning curves of this year that I'm finding is that I'm waiting for price to give his hand multiple times instead of taking the bite first. That first bite was this first candle here, engagement. I entered off in this area, if you remember the screenshot. I entered off the first engagement. I did not want to wait for price to give his hand multiple times. Price will not always do that. And I also entered off one more time here, just to make sure it's visible. Bring it down here. So I entered off twice in price. If you remember the screenshot, there was 2 blue arrows. Deeper discount. My first out was sell in the market was at 1%. I got in again after I've already taken out 1%. I got in again, perfect. I got out at collecting these equal highs. Price continued to run, it consolidated a bit, smash, equal highs. Now, my second thing I need to learn is learning how to let my winners run. Take off like Sonic. Supersonic speed. Start shooting with 5.7s now. I need to let them fly. Usually my exit strategy is getting out in 4 quadrants. That's at 1%, 2%, 3%, 4, 5%, 7. I'm sorry. Rhythms get to me. But I usually get out in quadrants. Right? If I get, so super simplistic way, if I enter the market with 4 contracts, at 1% a contract comes off. So I can at least solidify 1 contract. And then I'm solidifying 2 contracts. And then I'm solidifying 3 contracts. Now my last contract, I will let that run until I get to like 5 or 6%. In this market, I didn't want that to happen at all. Not one bit. Why? Well, Asian session said that the high of the day, mathematically, standard deviations, the high of the day is near 3 standard deviations. So I got out close as I can to 3 standard deviations. It's here. And I got out at the tip top of this candle here. I didn't want to wait for another pullback. I was ready to be out of the day because I had to go work. I do property management for Airbnb, so you can only imagine how hectic that could be starting off the day, right? But that is how I mathematically priced out my exit. I want to be around 3-4 standard deviations. I want to get out in percentages, quadrants, based off how many contracts that is on price. I'm also getting out around a new high. If there isn't a new high, I'm getting out in quadrants. Let me say that correctly. My interim price, it has to be below new day opening price, or a displacement away from new day opening price. This is a displacement. There's an order block. There's an entry. There's an entry. There's an exit. There's an exit. There's an exit. Mathematically, there's my science. And that is possibly my last trades of the year. Thanks, guys, for watching. Remember, you must live more righteously. That goes to trading, family, work, make better decisions, make better trading decisions so you can live a better life. Cheers to the end of the year. Well, I'm holding up my coffee now. I'm not taking a shot, but you know that sound. Cheers.